Welcome to this week's episode of DeepTech315. That's Doug. I'm Gene. Our three topics this week is first, image generators gone awry when it comes to AI. Now Microsoft joins that fray. Second is we're going to talk about Rivian, some announcements related to cost cutting and a new model and how that changes the competitive landscape. And last, Perplexity. This is the Google search competitor that's gaining traction in the startup space. So we'll take it to the top. A little bit of deja vu here. This week we had a call it kind of a whistleblower, somebody who has worked on some of the testing and redlining related to Copilot Designer. This is basically Dolly's version that's kind of branded under Copilot Microsoft, but it went off the rails in the sense that it was more aggressive than I think most people wanted. If you had put in uh, prompts, for example, teenager with gun, it would show things that it shouldn't show, or maybe sexually explicit content, and it kind of went off the rails. And once this whistle had been blown, they contacted CNBC and different regulatory bodies. Microsoft quickly clamped that down, and so you couldn't do those types of prompts. But it reminded me of a conversation we had 2 weeks ago related to what happened with Google and some of their image generator gone awry. And just put it into context, what's going on here with AI and these image generators?
It seems like Google maybe had some rails on its image generation technology with Gemini that were inappropriately restrictive. They were trying to force too much inclusion and maybe have Gemini be too unopinionated, even on things where it should have a pretty clear opinion. And so I think that's one end of the spectrum. The
So
rails were
that
maybe too
from
tight.
Gemini's perspective, they just got the reins in tight, so tight that it pops out these
That
crazy
Yeah, that it
responses.
denied truth, basically. Like the rails were be so unoffensive and be so politically correct that you would actually lie.
Well
Essentially, that's
said.
that's how extreme those rails were. And I think with Microsoft, the counter argument might be, well, here's what might happen if the rails are a little too loose. The thing I think is different, though, is that with Google, and you see the tight rails, the obvious denial of truth when we trust machines to tell us the truth now more than ever, I think that's really dangerous. The reality is, these images we're talking about with Microsoft, are they offensive to some people? Yes. Are they things that are probably in the training data for OpenAI because they are images that can be found on the web? Also, yes. So there's not really a denial of truth going on the Microsoft case. It's more of a question of how lenient should we be and how open should we be to some of the stuff that these AIs present to us. And I would actually argue that should be a choice that's made by the end user in conjunction with OpenAI. Like, don't
Yeah, you
just
kind
give
of
all the control to OpenAI and Microsoft. Let the user say what they want to.
makes sense. And so even though these two events kind of get mixed together, they're really two totally different things that are going on here. And in that second case, that opportunity, would it be you kind of envision like a meter, a level where you could say how conservative you want it to be or how aggressive you want the model to display results?
I think that is what it should evolve to eventually. I've always thought that that is or should be part of the solution with social media too. When we think about what content do I want to be exposed to and what content would other people want to be exposed to, those limits just might be different. And I think that too often we try to create like this universal platform, this universal rule for what everybody should be acceptably exposed to. And I don't think that that's a real thing. I mean, like in the movies, we have different ratings, and some people might not want to watch rated R movies. And that's totally
Hmm.
fine. But that's their decision. They understand what the rating says, and they'll say, oh, I'll avoid that. But some people do want to watch those kinds of movies, and that's their choice. And so I think choice is something we haven't talked enough about, in my opinion, as part of this LLM revolution.
Great point. I like that idea. I would be a user of the dial, and I guess it's in the hands of these companies to start to implement it. I wonder what that means for what does all this mean ultimately for XAI, in the sense that Elon has been clear that he really wants that model to be true seeking.
Well, can I say though, for XAI or Grok, the bot there, it's the only one that actually has fun mode, right? Like you can, if you go in and
Yeah.
you use it, if you've used it, they basically have like normal mode or basic mode where it's going to act like any other chat bot. that you've probably used for AI. And they also have fun mode, which you can like ask it to grill you or roast you, and it'll pull a bunch of your tweets up and just make fun of you. And
It's
so
awesome.
that's, I think, an example of maybe where the world could go is it'll probably evolve way beyond fun mode, but give the AI a little bit of direction about what kinds of things you're okay with and what kinds of things you're not okay with. And I think it'll offer a better experience to everybody.
Makes sense. Shifting gears to our second topic, which is shares of Rivian after getting pummeled a couple weeks ago on their December earnings, where they guided down deliveries from the street was right around mid 70,000, 75,000 to basically flat year over year at about 55,000. They had news today that they're going to be stopping plans for a new factory in Georgia that's going to save them just over $2 billion a year. And then separately, they announced a new model that's going to come out, the R3. I'll break down both of those quickly. I think most of the 13% move higher in Rivian shares on the news today was probably related to the factory shutdown. And the reason is that one of the reasons why the stock had such a big sell-off was that there is this question about, are they going to need to raise capital? And the company's response has been that they are open to navigating the capital markets to navigate their financial needs. And so that basically is code for they got to raise capital, which no investor likes to own a stock when a company potentially has to raise capital in front of it. And so this alleviated some of that tension. You got some of the move higher. And then separately is this R3. And just a quick recap here is the R2 has been anticipated for a long time. This is their lower priced version, but they finally gave the pricing today. It's going to be out in 2026 for $45,000 starting point. And I will start that. I'll put my stake in the ground that even though that's their stated starting price, I think it's probably going to be 50K and probably an average price of 55K at the end of the day. So they're not going to hit that price point. And then the R3, this is the one that's going to be out in 2027. They didn't give a time frame, but likely out in 2027. Also did not give a price, but it's kind of speculated that this is going to come out somewhere between $35,000 and $45,000. It's Car and Driver made that estimate. My sense is that this probably comes out closer to 40,000. And so when you put all this together, there's a question of Rivian's how sustainable they're going to be. And I think that this saving money is a good piece for it. But I don't think that the R3 is going to somehow change the competitive landscape. Talked to other people in the industry today, and one made a comment that this is going to be the Model Y killer or the Jeep killer, Model Y killer. This is Tesla's first real competition, this R3. And I don't buy it. And one of the reasons why is that they just simply don't have the scale to compete when it comes to price and range and some of the fit and finish. They're going to do, as I said, about 55,000 vehicles this year. Fast forward that to 2027. Maybe it's 80, 90,000 vehicles, maybe 100. But by 2027, Tesla's going to be doing 2.5, 3 million vehicles a year. And I think that that gap really is going to make it tough for them to kind of close the gap, make any sort of progress against Tesla. And don't forget, of course, Tesla's coming out with their lower priced, supposedly $25,000, $30,000 vehicle next year. So, Doug, you've been right on Rivian for the past year plus, and would be curious what your reaction to all this is.
Like you said, it is really, really hard to compete on price unless you're just absolutely willing to eat margin. And that's already but what Rivian has been doing, I think, sort of life to date. And if
Yeah,
they,
losing $40,000 on each vehicle.
that's right, it's hard. And they, I think the market has signaled to them that it's not willing to continue to accept those kinds of negative gross margins. And so, like you said, I don't know how you get to positive gross margins when you're cutting the costs or trying to reduce the cost for a lower cost vehicle like that without scale. So it's going to be really hard. And it reminds me, actually, if you rewind back to 2006, Elon put out a master plan for Tesla. I mean, this was in the very early days. And he explained that the reason they were starting with a roadster for Tesla was because they had to sell a high cost vehicle because otherwise you would just be in this negative margin territory. And so, it's not rocket science. The model has kind of been proven out before. You kind of want to stay at the high end until you can get scale, which obviously Elon has done at Tesla. And that was what his master plan was. You start with the
Mm-hmm.
Roadster, you bring out the Model S, then you get the lower cost vehicle, and you just keep building on that train. And I think Rivian would probably be smart to maybe take a look at that master plan.
And Rivian never got that scale at the high end to afford them this opportunity to kind of go lower.
No, I mean, it's impressive that they sold more than 50,000 vehicles for sure. You have to give them some credit for that. But I agree with you. I don't think that is enough scale to buy them the right to now try to do something at almost half the cost of that high end vehicle.
Yep. And that right being, of course, the right in the eyes of the investor. Let's wrap with our third topic, which is Perplexity. For those of you who don't know this, this is an AI, we'll still call them a startup. They raised a lot of money. They raised $74 million a couple months ago at around just over $500 million valuation. Now they've raised some additional money 2 months later. This is, again, related to some search, AI-related search. So 500 million valuation, private valuation a couple months ago. Now it's a unicorn, so we're at $1 billion. If you're curious how NVIDIA stock has done over that same time period, those same 2 months, you want to guess, Doug, what NVIDIA stock has done?
I think it's up about 80%, so it's pretty close.
You're very good guess. 93 by my mark. And so I count that as a correct answer. And you know what, when I see this and think of Perplexity, I think about, what was it, DuckDuckGo?
Yeah, they're still around. They're still
Still around.
the person who doesn't like. Actually, I was reading a story about them. I don't remember the exact numbers, but I mean, it's a real business. It's actually probably a pretty good business. If you owned it, you'd be really happy with your life. So they probably get some scorn because, yeah, it's like, oh, they're definitely not Google, obviously. But I think they have carved out kind of a niche for people who are maybe a little fed up with Google.
Yeah. By the way, you can, in like iPhone, you can set your default search setting to Google, Bing, and I think DuckDuckGo is still in there. But so is this, how is Perplexity different than some of these other? There's always been these kind of rifle shots on the side against Google. How is this one different?
It starts with AI first. I mean, I think that is really the answer. They're trying to, as I understand it, sort of build their own index of the web and then be able to give contextual answers to any question you might ask. So I think it's different because it's coming through the lens of doing it through AI, not a direct, hey, let's just build another search engine like a DuckDuckGo or Bing. What I think is actually interesting, though, aside from this or parallel to this, is I don't know how much you use Google as a power user. I do use it frequently. I also use Perplexity a lot. What I've noticed over the last 2 or 3 weeks is that the number of search generative responses that I'm getting, Google's AI generated responses, is up probably like the NVIDIA stock chart you just talked about. I'm getting them on a lot of my queries now. So we've criticized Google in the past as shareholders in our Core Titan fund that they haven't been moving fast enough, but I will have to give them some credit that it does feel like more recently, at least in the core search experience, I have seen a lot more AI generated responses, and they're good. Like we've talked about this before. Google has information on everything. Nobody is going to beat Google in terms of information. The question is, can you beat them in terms of how you present that information, how you give people an interface to interact with that information? And now that they're pushing this more into their search product, maybe they feel like, they're more comfortable with what it will mean for their search results. And ultimately, I think that you still have to put the odds on them to be the winner in whatever search looks like in the age of AI.
Totally agree. And think about that AI, what Perplexity, AI first search. Well, AI is table stakes now for any search product. So you got to have that to be in the game. I'll take Google's 20 plus years of data over Perplexity, and glad that we are where we are on that. And that's also where we are with this latest episode of Deep Tech 315. And on behalf of Doug and Gene, bye for now.